Welcome back, Alpha Hunters. Hope everybody is doing magnificent this Monday. But you're probably not, because unless you bought some puts Friday, it's probably not looking all that great. Yeah, you know it's a bad day when you wake up to text messages from people saying, "Oh my gosh, the VIX is like at 60 or something like that." And I would say, I usually do keep my eye on the futures. Especially Sunday, anytime in the evening and stuff like that. And I'm not totally shocked. And I'll real quick before we kind of get going through the normal stuff, I'm going to go over to the futures market. And I'm going to kind of show you why I'm not shocked what happened overnight. One, the futures had a pretty significant gap down. This is the gap down that we had on the futures Sunday night when the futures market opened. So we gapped down already on the futures. We gapped down like 0.5%. And it was just below the lows that we put in on Friday. And one of the things that we've kind of been looking at and talking about is like we are really close to breaching into some pretty large air pockets on the market. And then when you, on top of that, the Japanese market was down like 7%. Bitcoin was selling off. And we can look at some of this a little bit later, but Bitcoin was selling off pretty good. So I'm not shocked that the futures wound up tumbling all night. They were down, I think, like 4% pre-market or something like that. So not totally shocked. And I mean, this is kind of what happens when you get into those air pockets. In between like the longer term moving averages. So we can look a little bit further on the daily, but nice gap down here. Kind of like what I kind of mentioned on Friday. You're probably looking to see a little bit of some consolidation, push higher. I would probably still lean that way right now. We'll take a look at the daily picture. I would still kind of lean that way, especially with how large we gap down. We've been selling off pretty good here over the past 3 weeks. I mean, it's a large gap down. A large gap down. 4% right there. So, nice run, first 30 minutes. And we haven't taken out the highs in the first 30 minutes, 35 minutes or so. So, kind of looks like we're maybe trying to base here. We'll see what happens. But, yeah, anything kind of goes right now. Obviously, you can see the Qs, which the SPY is currently down around 3.2%. The Qs are down about 3.4%. Qs had a pretty large gap down. Obviously, they got hit pretty good. They gapped down 5 1/3. Woo! That is a move on the open. Jeez. IWM currently down 4.3%. So out of the 5 I track here, this one's down the most, and it did gap down about 5.3%. So it has moved up 1% intraday. Okay. DIA, also nice solid gap down, currently down 2.66%. RSP down 2.5%. Okay. All right. Yeah, RSP, man, this was kind of concerning last week. We came up, we snagged that high. We did not hold. We had a pretty good reversal off that high on Wednesday, and with how strong then we sold down Thursday and Friday, it was kind of like holding your butt to the seat, like, or what's about to happen here. And now we're just in the middle of no man's land, right? We just broke through all these moving averages, and now we got the huge pocket, right? The huge air pocket between the 100 and the 200. And the thing that really sucks is, well, we bounced off the 100 on Friday, and we're gapping all the way even below this little channel that we kind of had back through June. The little consolidation, even the beginning part of July. So we kind of broke that down a little bit today. I would like to say that we bounce here and go higher, and I'm not going to say we're going to go all the way back to like the 170s, but I think we'll probably see. Man, this is just me kind of thinking here, because when you get into these pockets, I mean, it really, I mean, you can just go straight down to the next support level, or you just kind of jump into these kind of pockets, and you can see a bounce, but most likely I would expect to see downside come later on. Honestly, and this is probably going to be my opinion on all 5 of these. Let's just kind of run through them real quick. DIA is kind of the same thing between the 100 and 200. IWM's bouncing off that 200, so you're probably going to see a little bit more upside here on the IWM. Qs also gapped below its 200 daily moving average. Yeah, we kind of talked about how Friday did not look great. SPY, it's in between its 100 200, so this thing could definitely keep going lower. So the one thing I'd say is I wouldn't try to panic right here right now. I honestly, this does not look great, but understand there's going to be probably two scenarios that probably happen here on the market. Either one, we're going to retest higher, which if that can happen here in the next couple of days, you're probably just looking to either get really protective or just get out of stuff. And then you'll probably see a move like that later on. Or maybe we'll continue to roll back down here the rest of the day, come back down to the 200 moving average, and then you're going to look for probably some bounce off of this level, and maybe later on we come up to the 100. Either way, you can say, hey, you know what, I'm going to try and play it for this bounce to the 100, and then I'm going to get out, readjust positions, whatever. And we might even go up farther just because of this gap down that we had Thursday, Friday. So I wouldn't even put that out of a possibility. But if we roll down to the 200, I would say you're probably just then going to wait to see the bounce later on. Even if you just get out kind of maybe back at like the same levels that we're kind of at now. Either one, you could probably happen. But I mean, we've seen a pretty sharp sell-off here. It's really tough. I want to take a look at the VIX real quick. So the VIX, I mean, spiked up into the mid-60s today. That's crazy. That's crazy. I mean, the last time we were up at these levels was COVID. It was all the way back in the beginning of 2020. And last I looked, we're not shutting down the economy. Right? We're not shutting down the economy like we did back then. So you gotta understand that. Could we see more downside? Yes. Are we in a situation like we were back then? No. I get some of the risk that are starting to kind of percolate out there that are really starting to show their head. Right. Last week we got jobs data was just not good. Unemployment has increased to 4.3%. Non-farm payroll did not climb as much as it was expected to. But also, I mean, the market doesn't just drop off. It just doesn't waterfall off every day. I mean, understand like, okay, this hits, this hurts. I get it. But I mean, this is something that we've been talking about over the previous couple of weeks. Like, if you're not happy with some of these, like 2/3% down day or 1% down day, it's like, okay, it's time to start to really then manage the risk. Like, think about this. We went, I don't know how long it was. It was like one of the longest runs we had ever gone without seeing a 2% down day on the S&P 500. It was like almost a year and a half, I believe. I'm not quite sure. I'd have to look that up, but it was a long time. I think it was the longest run we'd ever had, and it was going all the way back to late 2022, like October, right? September, October. Anyways, we finally got one here back in July 24th, 2 weeks ago, on that Wednesday. And what happens when you're spinning roulette, right? When you're spinning roulette on the roulette table and it doesn't come up black for like, I don't know, 30 spins. Well, it's like, well, black's like 50% of the roulette possibilities, roughly. Depends on how you're doing it. That's pretty astronomically high. So what's going to happen on the flip side of that? Well, we're going to see black get hit like quite a bit, right? So does it make sense that we start to see more 2% down days? Yeah, it does. Like, I'm not totally shocked by that. Are we going to see a 2% down day today? Honestly, I don't know. I don't think we will, just because, I mean, we saw a pretty good sell-off late last week, and then we had a huge gap down today. You can see we're only down 2.6% now. So we probably just had a little bit of a bounce there on the market. Yeah, we just had a little bit of a bounce there on the market. So, yeah, just understand the ebbs and flows of the market. It's one that you don't panic. You just say, okay, that was something I don't want to deal with. and you looked at how to manage it, right? Looked at how to manage it. So, I mean, that's all you can do. That's all you can do. I kind of mentioned last week our market outlook, and I've kind of mentioned this before. What I would want to do now, if you're really worried about stuff, is I'd rather just be liquidating stock assets. I don't really want to be anywhere. You can see all the assets; they're all getting hit. They're all getting hit, and this is the problem. It's like I don't really know where to go run. I don't know where to sit in stocks. I would rather just go to bonds, 3 to 6 months. You buy the bonds, you let it go to its maturity date, and then you just re up that 3 to 6 month bond, and you just wait. You wait until the market like cools down or gets to a price level that you are much more comfortable buying into. Maybe it's back down to 360, maybe it's 400, maybe it's 440. I don't know, but that's where you have your line where you're just like, okay, I'm down to be bullish. I'm down to be owning assets at that position at that price level, and there you go. But that's what I'd rather do. I'd rather just be rolling government bonds right now. Yeah, that's about it. That's all I'm going to say about that. All right, we'll just keep rolling. DXY dropping off pretty good. Even broke this low back from March. So, yeah, I mean, basically all the lows we got left now is the low to start the year back in January. I guess it's all the way back down here because we did have a nice strong bounce on day one of the year, January 2nd. All right, so yeah, expect dollar to drop off a little bit more. Gold. So what's interesting is even safe havens, gold, GLD here, dropping off pretty good. We'll take a look at gold futures because obviously we bounced pretty good here, but gold futures has actually made highs here recently that the GLD does not have. I mean, I don't know. Our our precious metal is going to be a safe haven spot. Yeah. I mean, maybe. I don't know. That doesn't. I would think they probably would be. The other one, Bitcoin. I kind of mentioned that earlier, so we're going to take a quick look at that. Bitcoin. People talk about the safe havenness of this. I don't really buy into that all that much. This is just more of a past 10-year hype thing, in my opinion. Gold looks a little bit more attractive than Bitcoin. Yields. Oh man. Yields. So I think my perspective on yields is not going to change. I still don't think we're going to drop off substantially. I'd have a hard time believing we get below this low that we put in back in 2023. Maybe we do. I don't think it'll be long lasting. The other thing you can see is yields have bounced back pretty well. They bounced back pretty well from where they were. I'm not saying being bearish on bonds right here, but because we had a pretty good drop off. The one thing I'll say is if people do flow into bonds, kind of like what I was suggesting earlier about rotating into 3 month, 6 month. But this is a 10-year, right? This is the 10-year. So if you're looking to maybe get into short-term bonds, and you can see the 2 years like just absolutely climbing right now. Bounced pretty hard today. So if you're looking to do that, like you're just gonna go buy. Okay, I'm gonna go buy 3 6 month government bonds. I'm just gonna roll that until things look a little bit more stable, or you get to a price level you're attracted to. The people are gonna look. I mean, what's really pushing people into government bonds? Well, it's risk. It's safe. It's people that want safe haven. And what I mean, why are people wanting to see safe haven? Well, unemployment's really bad. Or unemployment's climbing. I want to say really bad. And there's other geopolitical risks that are going on out there. The Middle East doesn't seem like it's getting any better. So a lot of things like that. Especially the unemployment part with how high the debt to GDP is, that once people see that the economy's dropping off and the debt is continuing to go higher and the debt to GDP just continues to go higher because I mean it's already the highest it's ever been, people will flood out of bonds so rapidly that the yields will just climb. And that, I mean, I'm not saying that's going to happen today or tomorrow or next week or whatever, but it is not going to be a great look. It probably won't happen anytime in this like market downturn, however long it lasts. One thing that's interesting here is we did actually get positive here on the 10 and 2 inversion very briefly overnight. Yeah, it looks like this morning, about an hour before the trading day open. So yeah, we did uninvert very briefly, but we did come back down. So okay. But I mean, if we continue to see risk percolate, I mean, I would expect the 2-year to kind of keep dropping off here over the next, probably the rest of this week. So doesn't really matter. HYG has dropped off quite substantially. Interesting because yields are down, right? If yields are down, why is the HYG down? But I get it. This is the high yield corporate bonds. So this is the riskier side of the bond market. So if the riskier side of the bond market is not doing well, then yeah, I mean, this should correlate a little bit closer with stocks. Honestly, if there's pretty if there's optimism around being bullish in the market, you should see HYG actually doing somewhat well. It also it really does depend though with yields, because I mean bonds and the whole yield pricing really kind of doesn't really make it an even relationship. But LQD also down, which is the thing that's really interesting about the bond prices. But the TLT is doing good, really good, right? So which area of the bonds are people going into? It's the TLT, it's the safe haven, it's the government stuff, it's the guaranteed stuff. And that's what you need to know, right? I mean, people aren't flooding into corporate bonds where, whether it's risky or not, I mean, investment grade is not really risky all that much. And, you know, seeing how much yields are down, I mean, bonds should be up, but the business bonds are not. It's government bonds that are doing actually pretty well. So, but this is going to be probably the most important thing, is sector rotation. Probably not so much, you know, this look, but it's going to be the intraday look. So when we get there in a second, we'll take a really good look at that. All right, so how are sectors performing on the day? So financials, energies, healthcare, discretionaries, and tech all getting hit pretty good, as well as materials all underperforming. Outperformers, communication, staples, industrials, utilities, and real estate outperforming. Okay, so this is the one that really probably matters a lot. Just because the gap down was so large today, this is probably the one thing that really you want to pay attention to. Is where is money flow during the day? First off, so we see tech is leading, makes sense, right? They're the big beta, right? They lead the market up or down. So tech is outperforming the most, discretionaries and communications. So that kind of makes sense. And yeah, that's where the money's flowing intraday. So real estate underperforming, industrials, materials, financials, energies, healthcare, utilities, and staples. So what's really kind of concerning here is everything else is underperforming. I was kind of hoping to see one sector also outperforming, like utilities or materials or something like that. But we're not seeing that. It's people buying things that have worked over the past decade again. But this could also be people that have been bearish on these things over the past 2-3 weeks that saw this big gap down today say, hey, you know what? I'm closing my bearish positions, because how often do we gap down 4% on the market on the open? Yeah, it doesn't happen that often. That's pretty rare. So you gotta take the wins when you get them. You gotta close out those bearish positions like that. So this is really kind of a concerning look, because yeah, we don't have any other sectors that maybe you'd want to potentially look for possible winners in other areas.